Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you. Thanks for having me.
All right, so we're talking Chipotle. The stock recently hit all-time highs ahead of last quarter's earnings. We saw some slower growth, but still double digits. I mean, what kind of data are you guys seeing? Because we've seen a pullback in all this, and I'm going to ask you a question about this Ozempic and Wegovy thing, the impact that it's having on a lot of restaurant stocks at this point.
Sure. You know what? It's interesting because this stock was riding high and going into earnings. Their earnings went up about 20% quarter over quarter, but their revenue missed expectations. So it shows that they're getting more efficient, but their revenue growth is not as much as the investors want. And of course, revenue growth is the primary driver at that top line revenue. We need to see that growing very fast. So when we look at the data, we've got demand at 2-year demand at 2-year highs. That's mentions, purchase intent, web visits, all of them are up significantly. They just had the carne asada. They brought that back for a limited time. I think people had a good reaction to that. They did raise their prices, which a lot of their competitors have done. That led to a decrease in happiness. But you can see here on just people talking about Chipotle in general on social media, that blue line, it's basically at all-time highs right now. Just a little bit pullback from it, but the trend is going up very strong. And so, I like the fact that that's hitting all-time highs, and the stock is down just a little bit, kind of sideways since that last earnings results disappointment on the top line revenue. But yeah, web visits are also up about 13% on a year-over-year basis, right at all-time highs. Happiness is down slightly. You can see the web visits here doing very well, plus 13%. Happiness is down slightly, like I mentioned. They raised their prices a little bit, especially on proteins. But a lot of their competitors are doing this. It's kind of a must. I mean, their costs of goods sold is going up. They have to have those price increases. So they did drop about 2 points. Still falling quite a bit behind Shake Shack, but beating up on McDonald's as they should. They're a little bit more premium than McDonald's, but there's just your comparables, sort of the high and the low on happiness and where Chipotle falls in. I will say that I'm excited about their focus on automation, innovation, and getting more efficient. I mean, they're testing out robotic preparation for bowls and salads. I'll be really pleased when I see a robot roll a burrito. I don't know if that's ever going to happen, but right now the bowls and salads are something they can do. Just dump in the ingredients, especially for digital orders. So if you order online or on the app, you can have a robot create that for you and get all the ingredients just right, and it's ready to go while the employees do other things. It's obviously going to be an expensive investment, but over time they're going to have less labor. They're going to have faster order fulfillment. And in addition to all that automation, they're upgrading their equipment. They're getting faster grilling equipment that can cook chicken 3 times as fast, steak 4 times as fast, because it can cook on both sides. So this is a company that obviously sees efficiency as a very big factor in their value and their growth. So I love that going forward. I'd spend that money if I'm them all day long, and 2-3 years from now it's going to pay off huge. So I think the question in investors' minds is, okay, they're going to be super efficient. We know that more of each dollar that comes in is going to turn into an earnings dollar, but how many more dollars are coming in? That was what disappointed last quarter when they came in at $2.51 billion instead of $2.53. So our investors want to see continued growth. If you get that, I think there's going to be a multiplication effect. When you talk about if increased efficiency of that increased revenue, that's going to really grow that bottom line. So that's what excites me, and the fact that they're off a little bit from those all-time highs on the stock is a bullish setup, in my opinion.
Landon, they serve food with no artificial flavors, no preservatives. It's made fresh every day. All the things that they're doing right, they're growing from about 3,250 stores. Their goal is to be 7,000 stores. But I think, and the stock gets cheap, the stock gets overvalued, it's moved off. It's moved off significantly here off its highs. But I want your thoughts on this, Landon. The demographics of the United States and the fact that they have an anchor in the youth of this country, and as that age demographic keeps going up, this company is just going to get more and more popular. And they've been able to raise prices with no drop off virtually. So they're okay with the higher prices. This healthy fast food is a thing now, and they are You know what? They're becoming like a saying, like the Michael Jordan of something. Fast Market is the Chipotle of financial shows, Landon.
I agree. I think that, you hit it exactly head on. When they've got the younger demographic loving their product, they're going to continue to love it. And so as our demographics age, they're just pulling in more younger people, and the people that love the product continue to go there. So they're in a very strong position. Everything that we see, again, demand across the board is at all-time highs. The only thing that I could, if I wanted to be super bullish, I'd want their happiness level to be increased a little bit. Again, it was a 2-point drop on the price increase. I think that'll go back up to normal. But I'd like to see them, instead of being at 64 or 66, I'd like to see them get up towards 70 or so. But they do have a fantastic product and very loyal customers who are less price sensitive than a lot of others. So long term, I love this company. I love the setup ahead of earnings. I think this is an opportunity for investors to either get in before earnings, or if you're wanting to play a bullish setup, I think this warrants one for sure.
You mentioned the happiness levels. I kind of wanted to, dig into that a little bit, Landon, because I think, the price hikes that Kevin mentioned, it seems like they're not seeing that big of a drop off as far as, the number of visits. Their loyalty program, use of the app has continued to grow. So the footprint's growing. But at some point, it'll crack when, you're paying $18-20 for a burrito, right? Is that why we're seeing maybe a little bit of a pullback in those happiness levels?
Maybe. It depends on what it costs for you to go to somewhere else, right? To substitute that experience, either cook at home or go to another restaurant. The only reason they're increasing prices is because they have to, right? They're not just trying to just make more money. Their costs of goods sold are going up just like everyone else. So if you go to the grocery store and try to buy chicken or steak, it's up as well. If you go to another restaurant and buy something with chicken or steak, it's up as well. So I don't think that it's necessarily going to hurt them long term, as long as they're doing it with everyone else, which is what we've seen so far. Everyone else is increasing prices as inflation just continues to hit food extremely hard. And, if you're going to eat, you got to pay for it. And unfortunately, you got to eat somewhere. So Chipotle is just playing along with the rest of them. They're not doing this out of, sort of corporate greed or anything like that. It's a necessity at this point. And I think that as long as that's the case, people will either understand or realize that that's just the way the world works right now, is everything's going up in price.
Yep, for sure. And as they grow and continue that scale, that is only going to help them in the future. But this stock's down from $21.75 down to $18.10 at this point. Are you guys positive on this because of the pullback?
Yeah, absolutely. I mean, we'd be positive on it if it was at those $2,000 levels, but we're very positive on it because it's pulled back. I think it's a little bit undervalued right here, especially long term with all the automation efficiency efforts that they're putting into it. Short term, we do see this quarter being a good quarter, maybe not blowout, but demand and everything that we've got is at all-time highs. Our earnings score on this one is plus 32. Not extremely bullish, but definitely enough to make a trade on this one if you're feeling it.
All right, great stuff. Great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the Chipotle data. A couple of things I wanted to mention, Kev, before we get into your example trade is only 28 million, 27 million.